Today, we're tackling a question that every single trader has to answer for themselves. What's your rhythm? What's your natural pace in the market? We're going to break down the three big trading styles to help you find out exactly where you fit in. So, let me just ask you this. In your everyday life, how do you operate? Are you a sprinter, all about those quick, intense bursts of energy? Or are you more of a marathoner, someone who settles in for the long haul and plays the long game? Just think about that for a second. Because believe it or not, that exact same idea is at the very heart of trading. The biggest thing separating the major trading styles isn't some complex strategy. It's time. Simple as that. How long you're in a trade pretty much defines everything else. All right, let's get into it. First up, we've got the true sprinters of the financial world, the scalpers. These are the traders who live life in the absolute fastest lane of the market. With scalping, speed is the whole game. We're talking about being in and out of a trade in just a few seconds, or maybe a couple of minutes tops. The goal isn't to hit a massive home run, it's to hit single after single after single, racking up a bunch of small, consistent wins all day long. So here's the breakdown. Scalpers are staring at 1 minute or 5 minute charts and they're executing a huge number of trades. But I really want you to focus on that last line, precision needed extremely high. Think about it, because your profit targets are so tiny, just a few ticks or points, a small mistake when you enter or exit can completely erase your potential profit. There is virtually no room for error. It has to be razor sharp. All right, let's take a little bit of a breath and slow the pace down a notch. Next up is day trading, and this is all about finding a rhythm that fits within a single trading session. I mean, the name really says it all, right? A day trader gets in and gets out of all their trades on the same day. You're flat by the end of the day, so there's no overnight risk. These trades might last anywhere from 15 minutes to a few hours, and you're trying to capture one of the main moves that the market makes on that particular day. So you can see the big shift here. We've moved away from those super fast 1 minute charts to maybe a 30-minute or even a 4 hour chart. The number of trades drops way down too. We're talking maybe a handful of trades a week, not dozens a day. And yeah, precision is still really important, but you have a bit more breathing room. A small entry mistake is less likely to totally kill a trade than has a much bigger profit target. And that brings us to the marathon runners of the trading world. If scalping is that all out sprint, swing trading is about having the patience to run the much, much longer race. See, swing traders are looking to capture those much larger swings in the market's momentum. And that means you have to hold on overnight, for days, for weeks, sometimes even for a couple of months. The whole goal is to ride out a major, significant trend from start to finish. And this is where you can really see the big trade off. Now you're looking at daily or even weekly charts. You might only be taking a few trades a month. But notice that the precision needed is the lowest of all three styles. Why? Well, it's simple. If your target is hundreds of points away, being off by just 5 points on your entry has a pretty small impact on your overall profit. It's just a drop in the bucket. Okay, so we've met the sprinter, the mid distance runner, and the marathoner. Now for the really important part, figuring out which one of these sounds the most like you. This really sums up the choice you have to make. As you go from a short time frame to a longer one, the number of trades goes down, but the potential profit on each trade goes way up. The need for that pinpoint precision relaxes, and the whole pace of the game just slows way down. And here it is, the whole shebang, laid out side by side. You can clearly see how time impacts every other part of the equation. Scalping is all high frequency, small targets, and super high precision. Swing trading is the complete opposite, and day trading sits right there in the middle. So, looking at the spectrum, where do you naturally see yourself? This is the $1 million question, isn't it? It's not about which style is the best one, it's about which style is the best one for you. And the answer really comes down to two simple but super powerful steps. First, you have to take an honest look at your own personality. And second, you have to be practical and analyze your lifestyle. Let's talk personality. Are you impatient? Do you need constant action to stay engaged? If the very thought of holding a trade for 2 weeks while it goes up and down and all around makes you anxious, then swing trading is probably going to feel like torture. You might just be a natural born scalper or day trader. Now for the reality check. Your lifestyle. Do you have a full time job that keeps you away from a screen all day? If you do, then day trading is basically impossible. But swing trading, where you can just check your charts for a few minutes in the morning and maybe again in the evening, that could fit perfectly into a busy schedule. But here's maybe the most important takeaway of all: whatever you choose today is not a life sentence, it is not a permanent label. So many traders evolve. The person behind our source material actually started as a pure day trader, but after years in the market, they started exploring swing trading. Your style can, and it probably will, grow and change right along with you. So, the real question isn't just who are you right now, it's who will you become as a trader. Whether you start out as a sprinter or a marathoner, this journey of finding your own personal rhythm, well, that's what it's all about. And just figuring that out is the first and most crucial step